Today, Bitcoin reclaims the $90,000 level for the first time since early March. Paul Atkins, the SEC's new crypto-friendly chair, is sworn in. And Gerald David of Arca Labs joins Galaxy Digital's Jason Urban to explain a new settlement network powered by a tokenized treasury fund delivering yield to institutional clients. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Bitcoin retaking the $90,000 level for the first time since early March as stocks pop on Wall Street at the same time. Hope for a de-escalation of trade tensions between the U.S. and China had the Dow surging by 1,000 points at midday. Also at noon Eastern, Bitcoin jumped more than 3%, trading at $91,000. Ether rose about 5%, and XRP climbed nearly 2%. Now, this is Bitcoin's second day in the green as investors look to crypto to curb some of the turbulence in stocks. Global trade tensions remain top of mind for Wall Street, along with increasing attacks from President Trump toward Fed Chair Jay Powell. The president is demanding Powell lower rates immediately, which has led to growing concerns both on Wall Street and around the globe about the independence of the Federal Reserve and the strength of the U.S. economy. Stocks, bonds, and the U.S. dollar have all fallen in recent days. Now, Bitcoin was highly vulnerable to stocks' tariff-fueled turbulence earlier this month, but has been decoupling from risk assets in the past week or so. Taking a look at crypto-focused stocks as of around noon, all are in the green along with broader markets. Coinbase soared more than 10% as of midday, Strategy jumped more than 9.5%, and Bitcoin miner Marathon surged a whopping 12%. Okay, let's talk about the top stories. The Securities and Exchange Commission officially has a new crypto-friendly chair. Paul Atkins was sworn in yesterday after the Senate confirmed President Trump's pro-crypto pick to lead the SEC earlier this month. Atkins previously served as a commissioner under former President George W. Bush. Since then, Atkins has guided players in the crypto industry on best practices. In fact, during his opening testimony before the Senate Banking Committee last month, Atkins pointed to his experience in the space and said he will work with SEC commissioners and Congress to build a crypto regulatory framework. Atkins succeeds Gary Gensler, who of course was widely criticized by the crypto community for his regulation by enforcement approach to the industry. Last, Circle revealed a new cross-border stablecoin payments network. The stablecoin issuer announced Circle Payments Network yesterday, geared to service financial institutions. Now, this comes about a month after the FDIC eased its guidance on banks wanting to engage in crypto-related activities. Circle says the new network will enable cross-border money movement use cases for businesses, financial institutions, and individuals, including payroll and capital market settlement. Now, Circle was also in the news earlier this month after it filed for an IPO to list on the New York Stock Exchange. All right, for our main story, today digital asset industry leaders, including Galaxy Digital and Avalanche, announced the launch of a real-time yield-bearing settlement network for institutional clients. The network is powered by a tokenized treasury fund custodied at a special-purpose broker-dealer. Crypto World's Tanea McKeel spoke with Gerald David, the head of the consortium, and Jason Urban, global head of trading at Galaxy Digital, about how it works and what prompted this to come about.
A consortium made up of Galaxy, Avalanche, US Bank, and others, founded by Arca Labs, teamed up to launch what's called Link, a settlement network powered by a tokenized treasury fund that delivers yield to institutional clients. Now, this is scheduled to go live in the second quarter of this year. Gerald, you lead the consortium, so I want to ask you, how does this work and how did this idea come about?
Yeah, thanks, Tanea. We're super excited today to announce Link to the community. And Link essentially is a consortium that we've put together that involves several leading market makers in this space, many exchanges, as well as some stablecoin issuers as well. The goal for us is to create a real-time instantaneous settlement system that delivers yield back to its users. The market itself has been suffering from infrastructural deficiencies in the marketplace. And this consortium we put together, including Galaxy as well, will help solve for market fragmentation and also try to help us with mitigating counterparty credit risk between the industry participants.
Jason, as global head of trading at Galaxy, I am curious to hear from you. What made Galaxy want to be a part of this?
I think that since we saw Choke Point 2.0 happen and there was a lot of issues with the settlements that we were going through with Silvergate, Signature, and that was really kind of an underpinning the plumbing of the crypto ecosystem. The fallout of that has really showed that there's a need to have this interconnectedness amongst market participants to move money quickly, to settle quickly. to not have to worry about, okay, do I have banking rails set up with that person, or does this company have this? If more solutions that address that issue was what we really saw was required in the ecosystem. And that was when Jerry and Arca approached us and said, hey, I'm working on this. This is an interesting solution. And we said, absolutely. We see a need for it in the space. And, this was a great time for us to kind of step in.
So Gerald, can you talk to me about the approach of this network? Talk a little bit more about how it's meeting the needs that Jason just laid out and how it minimizes counterparty risk.
Absolutely. So the first thing that we aspire to do is have a community of market participants whereby the entire market can congregate in one place. And that's something that unfortunately has been absent from the space for the last 2 or so years. Absent having a place where folks can transact and settle seamlessly introduces risk to the marketplace. And risk is something that in digital assets, obviously, most people try to mitigate. So by having everybody in one place and one platform and allowing for market participants to either on-ramp to exchanges, to create and redeem stable tokens, or to settle transactions in one place, allows for the market to create efficiencies. But more importantly, by introducing broker-dealer into the equation, as well as U.S. Bank, that is going to be the central bank for clearing of all transactions here, what we've really done now is allowed for the fund structure to operate in a way whereby there is segregated funds held at U.S. Bank. And again, having one central counterparty mitigating that risk is something that the market's been dying for.
This kind of takes me back to the days of the R3 consortium and all of its like peers. Is there anything else out there right now in the market that's similar?
Yeah, I mean, I think the approach that R3 took was brilliant. They tried to bring together, the entire industry and create a community, and then actually create a technology that underpins it. I would say that there are a couple of settlement systems that have been in the marketplace in the past, but there's no broker-dealer facilitated market settlement system that's out there right now. We put together 3 different partners that are at the core of this initiative. Tacit, who is the leading technology provider and created the technology that underpins Signature Bank's Signet system, and T0, which is one of the broker-dealers in this space that has only one of 2 different licenses, the special purpose broker-dealer license, that'll act as the custodian for the digital asset securities that are actually created through this infrastructure.
I'm going to bring it over to Jason now. We talk so much about markets and price action at CNBC. I'm curious to get your take on the crypto markets right now, especially with, Bitcoin reclaiming 90K, kind of catching up with gold month to date in terms of performance. But what does the current market action, what is that? How does that affect this consortium that we're talking about, and the demand and the needs that you're hearing from your clients?
So to kind of interweave those together, the story about price action today, I think, is a dollar story. And we were catching up, Jerry and I were catching up earlier about, in the early days of crypto, it's like, is crypto a stock? Is it a commodity? Is it a currency? We're in an environment right now where people are concerned about stagflation. And in an environment like that, the first currency to zero wins. That's one direction you can go to solve the problem. And so the 2 currencies that right now don't have somebody actively trying to devalue them are gold and Bitcoin. And so right now you're seeing it really behave very similarly in that capacity, and that will pull the market with it. Where this intersection is with settlement layers is that more and more of the TradFi element is now approaching the crypto space, and they need things that they're familiar with to say, hey, go on chain and do this. And you get some of these banking institutions that are like, we can't get that through, but they can face a regulated entity, and that really is valuable because it's a solution that looks and feels familiar to them, but allows for them to participate in the crypto native ecosystem.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.